What's going on, traders? I'm Antoine Farrar, and welcome to another video with Digital Goats Academy. It is Tuesday, so if you've been tuning into our channel, you know today is our market forecast, where we pretty much predict what the market is going to do the entire week. Now, again, if you are tuning into our channel, we're not, you know, we're pretty accurate, but everything isn't spot on. So we're just giving a general bias for the entire week. But let's go ahead and get into what we were looking at for today anyway. Now, I do want to mention that I do apply a lot of fundamentals in the market. So today or this past weekend, I know it was the Supreme Court. They pretty much overturned a lot of Trump's tariffs, which I believe that added the positive influence we needed in the market to boost a lot of these indices. So if you see today, again, we look at the market like after opening bell, which gives you pretty much the best chances of being successful with indices or seeing any type of profit. So you can see today the market did what, like a lot of times we expect when it comes to opening bell. So opening bell traditionally, or, what we've been seeing since last year is that opening bell, when we're looking at a bias, whether it's bullish or bearish, so we're looking at the market to trend up or down, we want opening bell to do the opposite. So today, to be honest, I was looking for, or this entire week, I was looking for opening bell to actually put us up, but the opening of this week, the market actually sold off. So today, which we got the first reaction what I was looking for, opening bell actually brought us down and then pushed us up, and then this is where the market basically closed up at. Now, the one thing I want to talk about with US 30 is that, again, for me, I look at a lot of patterns in the market. I feel like that's how any trader should analyze the market, by identifying patterns, and patterns like that, isn't commonly discussed. So if you see this general area, this is actually where my buy zone was at initially. But even though that the market actually blew through all this data right here, which again, we've seen this happen last year, where the market will create these wicks, want to fill it with a candle and then push the market up. Now, for me, I already had the market, I already had US 30 marked up as far as my annotation. So a lot of these areas that the market pushed back down to was zones that I was waiting for the market to return to, or at least I had that as an option for the market to possibly push down to. So this week, opening up for Sunday, US 30 actually pushed down to 48, the low of 48,720. So last year, going into the end of 2012, at the end of 2025, I don't know if y'all remember, but I was saying that if price stayed above 48,500, I was still bullish. So for me, the fact that this is, pretty common with US 30, price pushed up this area, consolidated, broke down, faked us out with this range right here, pushed the market down to fill in this liquidity, and then the market is actually starting to push back up. This area right here that we have marked up, even though it's a gap, if you just scale back out, you can see that that's support. Because what are we looking for when we're identifying support and resistance? We're looking for either hills or valleys. So in this sequence, these are the valleys and this is the hill. So the fact that we're back at the valley, now I'm looking at price to actually push this back up. Not to mention just with this consolidation area. So if we look at where the market came down from this sell, it started consolidating. It broke out of this consolidation area. Now, I've seen this happen a lot where the market break out of consolidation. And this looks like the sell, you know what I'm saying? The way the market has pushed up, it looks like it's the sell point. But I don't think so. I think that this was an area that the market is actually trying to fill all this information in. We've seen it before. I don't have a name for this pattern, but like I said, the market push down. If this was a selling pattern, it would have done the opposite. So the fact that price is pushing back up here, normally when you're looking at indices, it doesn't work like traditional foreign exchange. So for example, I'm gonna just do this real quick. I'm mimicking what we just saw, what I just saw, right? So when you're looking at regular Forex pairs, so currency pairs such as like the euro against the United States dollar, normally when you have consolidation, price will want to break down like this, continue pushing down in that direction. With indices, it's a little bit different. And again, you can go back into the past and see that the market is a lot like that. So let me go ahead and erase this. Man, I'm kind of mad that they got rid of that eraser they once had. TradingView used to have an eraser where you could just erase the information and just straight up instead of just deleting all of it. So this is what I'm expecting with indices. Imagine that's the consolidation area. So imagine this is well, with US 30. So imagine, like I said, this is this consolidation area is supposed to be mimicking this area over here. So instead of testing the consolidation zone, I expect the market to blow through that. It breaks above this, it's already telling you what price is trying to do. Even though we have price closed bearish at post market, so going into a post market, the market is closed like bearish. That's not saying that the market is still bearish. That's just saying that that's how it closed. So if we have a gap, or if by the time we get closer to London, the market has pushed above this area, it's already telling you the sign. So that's something what I'm looking for. I know it is still like show signs that it wants to reject, just like we're seeing right here. But if anything, and like I said, keeping the information on your charts, this was the gap that the market created, I think this week. Yeah. This was the gap that the market created Sunday. You can see that it tests above this area, and now we're basically closed below it. So price hasn't touched into this area. So until price does that, I'm still looking at the market to rise from this general area. So we have consolidation. The market created support in this area. This once was a gap. This was an important gap that we were using. Let me see how far back. This gap goes all the way back to the end of January. So this gap is a representation of the end of January. So we just basically tested the end of January. Now we're boosting back up. And for me, if price was going to continue pushing down, I shouldn't see it come back up this high up. So with indices, what you would expect is that if price was like continuing to sell off, it shouldn't even have pushed like maybe like a shallow pullback, but nothing that would push this high, because the fact that we're so high back into this gap and a lot of data that we had prior, I'm looking at the market to continue boosting up. Not to mention, if you just add like political figures such as Donald Trump, he mentioned that price for US 30 was going to go to 100K before the end of his term. I see that happening like sooner than later. Not like this year, but by the time we get into next year, we definitely can see it at like probably like 75K, 80K, something to that effect. Mm. And I think that's it. So everything is just pure technicals at this point. So we're testing, you know what I'm saying? Like we've been testing above these areas, and I had marked up these zones, confirming that as long as price stayed above these zones, we were bullish. I did not want to see price come back to this consolidation zone down here. I did not want to see price come back to this consolidation zone down here. Now, again, we still have to see the market break above these areas, but just seeing that price is respecting this initial move, which, like I said, train your eyes to see it. Very common in indices. Break up, confuse you within like the return, and then price to actually create the support structure or resistance structure that it needs, and then for the market to actually continue going in this direction. So my expectations for US 30 is now that I believe we're in a bull market. I know we sold off at the beginning of this week after US 30, I mean, after 930 candle brought us up. Was this yesterday? Yeah, yesterday. 930 candle brought us up yesterday. Closed below. And then, like I said, today we had the opposite. So if you just look at what happened yesterday the market got extremely bullish, sold off around opening bell. well, got bullish at opening bell and then sold off around probably like what, 10 a.m. Same thing here. Sold off opening bell, but I think it ended up buying up by like 9:45. Let's see if our good old 9:45 candle worked for us. Yeah, if you missed this initial pullback, then yeah, the 9:45 candle, really the 10 a.m. candle would have served you. But I want to see what price. So you can see this is the opening bell candle. Push this back down to this gap, which the market was playing around, creating support down here around post market. So this was going into a post market and then it was hanging out around this area around London. It created this gap this morning, tested this gap, well, filled this gap. And then, like I said, the market kind of slightly got bullish and then brought the market down. Then, like 1 minute, just a 1 minute reaction. I'm just trying to see where price like pushed down and then bought back up from. 9:31 candles. So if you had like really if you had pressed buy as soon as like the as soon as the end of like the 9:30 candle, you would have had like a sniper entry or at least a good position within the market. As you can see, price stayed above opening bell, which is something that we wanted to see within that trading day. So the fact that price stayed above opening bell for me, I think that we're going to continue pushing up higher. So, like I said, I'm bullish for the week when it comes to indices. That means you still have to find your position. Don't get caught with your pants down. Everything is still trading. So, this is consolidation. Just keep this in mind that since I've identified this area, as long as it keeps buying up and doesn't return, I don't even want to see it return back to this area, but it's still the beginning of this week and the market could decide to test that zone if it wanted to. I doubt it. But again, early in the week, and I haven't seen what the news is going to be for us. So hold on. So remember, we like to mark the consolidation area. Why? Because if prices forever buying up from here, if it decided to test one of these areas, where is it more likely to test? Probably test this area whenever it decides to break up out of its high. So if we back out, remember, it's always going to be in an area we're not paying attention to initially. So when you scale out on the 8 hour, this is a custom time frame that I use. You can see like clear structure, but also you can see where the consolidation is. So again, how many times have we seen price buy up from here and then test these areas? So once price breaks out of this area, where is it more likely to test? Whether it's going to test back into it or at least the high. This would be the area if price is trying to target the consolidation zone. This would probably be the consolidation zone that price targets because one, it's hidden. It's on a smaller time frame that you're probably not paying attention to. What time frame was say the 45 minute. And this would be the area that we would be looking to buy back up, possibly if price, um, like I said, decided to return down here to have some type of correction or to test the high. Remember, when we break out and it starts its sequence, we're expecting price to start testing these highs. So if we do want it to remain bullish, we want price to test it, to test the high and not come all the way back into the gap. But that's all I got for US 30. Let's look at S&P and the Nasdaq. Nasdaq, like I said, between S&P and the Nasdaq, they've been showing a little bit clearer pictures compared to US 30. Now, there is one thing that I do want to highlight. Do y'all see this pattern? I discussed this before. This pattern within the Nasdaq. You can see this pattern on the Nasdaq as well as S&P. Let me flip to it real quick. I marked up both of these patterns, right? Now, the reason why I'm bringing these patterns to your attention is because we use these type of patterns to make sure to see if the market is continuing in a downward motion or upward motion. So we've seen this a lot where price will consolidate like or range down. Well, yeah, consolidate, and it'll be like either in a downward movement or upward movement, pretty much giving us the idea that price is going to continue in that direction. Price did not do that. So at that point, I was like, well, I think that we're on a bull run since price violated the pattern. Now, the reason why, like, I'm even talking about this, I want to go back to US 30 to show y'all kind of what I'm seeing within NASDAQ and S&P, and that US 30 did something similar to that already. So let me go to US 30 real quick, and I'm gonna highlight the pattern that I'm talking about because we basically already did it, and it's right here. I don't have it highlighted in orange, but you can see price did something identical to what we just saw. It's not on a major move like the Nasdaq and S&P, like it wasn't like a big consolidation move. But what I'm showing you is the representation like of the illustration. So you can see that price broke out of this area. It tested a couple of times. Well, did a shallow test right here, drove a little bit deep, and that was the big move that we had. You know what I'm saying? And then price said, hey, in order to validate that I am bullish, I have to come down here, create some form of support. It doesn't look like it because it's a lot of chaos and prices all jumbled up. But yes, in fact, this is support. So when I'm looking at, and I've used this style before. I don't want to say it's a strategy, but I've used this style before because again, I don't like, for me, I don't like say, oh, I use a trading strategy and stuff because the conditions are gonna change. And if you don't have any other weapons in your arsenal, then you might fall flat on your face. So when the conditions change for me, like I use what's appropriate at that time. And I can also use information that I see off of other indices because I'm looking at all three, even though I'm trading one, to kind of get a better sense of like what the market is showing me and give me an idea of what the correct direction should be, even though there's a lot of noise within the market. So we had already identified this area where price is staying above. That's one of the important things that I was looking at. Like I said, US 30 is a lot more volatile, so the consistency of being accurate with that is kind of like low in comparison to like S&P and Nasdaq. Well, I will say this. I am surprised that I was on point with Nasdaq, but again, it dove a little bit deeper. As you can see, broke up out of this area, decided to range after this consolidation zone, which is crazy to me. And again, this morning I annotated what was opening bell, and this was our support structure. I never changed this area. I never like tried to adjust it. I think I had like another zone that was up here before, and maybe I got rid of it. But this was the support structure where I identified, okay, this is where price was created support. As you can see, each time it tested this area, price bought back up. And then this was, to me, pretty much the last time that price was going to come back in this zone. And it's maintaining its trend one against this area over here, this pattern over here, which is like 24,500 to or 24,530 to 24,230 or 24,130. Well, I guess it doesn't matter. But either way, around the 24K area, right? Like low 24K area. Price is still above that zone. So as long as we're above that price zone, like price is telling us that it's buying up. I know we had that major like sell-off for like Nasdaq. Nasdaq had like probably the greatest sell-off compared to like US 30 as far as like the clearest picture, not like a lot of opportunity, which it was, but I'm saying as far as like the clearer picture where you could have like easily taken a sell. I know a lot of people took advantage of the sell yesterday, and look where we're at. This is what happened yesterday. This was opening bell yesterday. I didn't mark it up because we were back at our support structure. So I didn't want to tell myself this was opening bell and start treating it like a sell and start ignoring where I already created support. And as you can see, opening bell brought us down again. This is something that we discussed in my community over and over. If we're looking for indices to show us like a clear direction, we have to wait for opening bell. Opening bell normally tells us like the overall direction. So we're back into the gap from Sunday. So this is the gap from Sunday. We're above opening bell yesterday, opening bell, which is right here. Let me see. There we go. Yeah. We're above yesterday's opening bell. We closed structure at it. So to me, this thing is buying up. We could have like some type of shallow pullback, but since we're going into like the post market, what should we normally expect? We should normally expect consolidation. So I'm looking at the trend to still continue pushing us up. I did mention these areas being buy zones, but as you can see, price did shoot down a lot lower than what I expected. But that's just what it is with indices. So as long as you do proper risk management, nobody should have, like, if you did start buying in this area, nobody should have really been affected unless you were over leveraging or your account couldn't handle the backlash of the market, like pushing down. That's like a $300 move right there. And even from where it was at today on the NASDAQ. That's like $150 move. So, not too bad. You know what I mean? As long as your account was $700 or more, like not too bad. You just would have had to like, take the brunt force of the drawdown. But I did mention this was the area that I was looking at the market to buy back up. I'm still sticking to that. And the fact that we have returned back here, that was something that I was expecting going into Tuesday. I was like, all right, I wasn't sure how the market was going to react on Sunday. It shot down, given that narrative that, oh, the market's going to start pushing down, right? So I was surprised that it did like sell off the entire Sunday going into Monday. Yeah, continuing into Monday, but oh well. That's what price did. It was trying to hurry up and get back to a support structure because we did close bullish on Friday. So I do expect some type of pullback. I didn't think that it was going to go like 100%. Came 100%. So for me, expecting that the market was going to start buying back up Tuesday, which is in line with what I was seeking, like I'm still remaining bullish for all indices. So just with how Nasdaq is showing us right here, yeah, this will be my buy zone. I expect that the market may do like after it breaks out, may do a pullback back into this zone, but might be shallow. So we get up here, that's guaranteed. But obviously, we want to be in a low position, but we get up here back to this 945 candle because for me, price shouldn't return back to this zone. It comes back to this 945 candle up here. I expect some type of reaction. So maybe the market slightly pulls back. I expect the market to break this out. Now, we just got to see what the news is for this week that's going to give us the momentum to break up out of here. But I do think it's clear that everything is kind of price action. I mean, market structure at this point, well, technical analysis at this point. And if you look at price action is showing you that, yo, I'm trying to buy back up because we've still overall been bullish. I haven't changed my narrative on the overall trend. The whole thing is that it was the market trying to correct, and were we going to get an option to correct ourselves? I mean, for the market to pull back to these areas that we came from last year, which was like around October and around November. Those are the areas that I was looking for the market to come back to, but clearly it just wanted to consolidate. Like I said, the Nasdaq and S&P showed better signs than US 30 did, but they all been kind of ranging. So it did create this resistance up here. We're back down to this support. You can see that price basically tested the high of this. If we get rid of, you can see that price, and it did right here. This was the high of this breakout. I wasn't even paying attention to this. Well, I don't pay attention to the NASDAQ like that anyway. But anyway, so price broke out of this area over here. We're testing what? The high of this zone to keep the sequence. Support structure, market sequence. Now we have, price consolidating. So this is basically the new sequence. And then after price breaks out of there, it'll probably test this high until it has like a major move up. And we're heading towards Q2. So we're heading into March, which March would end Q1, and then we'll be heading into Q2. So these are exactly moves that we want to see the market actually start to show us, which is kind of giving us a clear picture. So I really believe that these are our buy zones. And like I said, don't get caught with your pants down and don't over leverage. So last but not least, S&P 500. Same thing. Like I just mentioned, S&P has showed us, and you can see how identical S&P looked to the Nasdaq. It's kind of scary. And what's weird to me is that last year S&P wasn't doing that. Like Nasdaq and the S&P weren't moving in tandem with each other. S&P was moving more like US 30. So last year you really could have taken advantage. And I'm gonna stop mentioning last year. It just was so great. But last year you definitely could have taken advantage of both S&P and the US 30 at the same time, which is kind of crazy. But it seems that that's no longer the case. And the reliability is that you can actually trade S&P and the Nasdaq this year at the same time. You cannot trade S&P and US 30 at the same time this year because they're just their market cycle is like having conflicting views with each other. So your best bet, one, like I said, to be like focus on one indice. But again, for the more riskier trader, I think you could trade S&P and Nasdaq in tandem. As you can see, this looks exactly like the Nasdaq. The one thing that I want to discuss with S&P is that same thing we did with Nasdaq. We're above our buy zone. So remember, I did mark this area for us to be our buy zone, and it did start playing in this structure to create the support that it needed, which it did. And price never came back to this area. So for me, just looking at S&P, the fact that opening bell this morning shot us down and it never came back, even if it would have like wicked it, I mean, tested it like at the line, that still would have been cool. But again, what are we seeing? What are we seeing over and over? We break this down to a line chart. And we remember, we know that there's a wick over here, but this is the structure. So this is what we have to respect versus like being confused with candles, right? So you can see that price dropped down, tested this this morning and then shot up, right? Where did the wick like let's see how low the wick tested, all right? Because I'm making a point. Well, one, you can see that that structure right there, just looking at that wick, something that you should pay attention to when it comes to trading indices is that, what you look at on a moderate time frame, like the hour, 2 hour, that's still structure. So you see price tested this wick. So it's wick to wick. But what's also the important thing that I'm trying to make stand out? Just break it down to a line chart. Don't think too much about this. We know that this is a wick, right? We know that this is a wick. Out of this area, what do we consider this after price broke out of this area? We consider this what? A previous high. Then we can even like scale down a little bit lower to see exactly. Look where this wick is at. Where is this at? Clear out the noise. Previous high. Wow, that's like you can't see it until it happens, but when you see it, it's like, man, it's so obvious. There was a previous high. Now, there were previous highs like um in the like lower versions of the market breaking out, like lower highs that the market broke out of. So it could have been a lower position that the market was trying to test, but it's the immediate high, the most recent high. So it's just whatever time frame the market tries to test that area. But again, we see this over and over. So this is the start for me of the new sequence. And as price decides to break up out of these highs, I expect price to start a new sequence wherever it creates, wherever one, it returns back to what? Consolidation. So we should expect it to return back to some form of consolidation and either test equal to that or the previous high. So this is the support structure. I'm still looking at same thing with S&P for the market to buy back up, but it's like no magic. We be patient enough. We wait for opening bell. Opening bell brought us down. If opening bell brings us down immediately, we should expect buys. Now, is that always true? I would say that's probably like a 60%, 60-40. I would say we're 60-40 on that. Um, maybe even 70. We might be 70-30, but I want to say 60-40 that we're on that where we identify, okay, the market's brought down. And normally it's made by wick. So anytime I see opening bell leave a wick and it's staying like away from that wick, oh yeah, I think that that's adding the momentum it needs for the market to actually start continue pushing up higher. Or if, it showed us a little bit of different signs today, I would have been saying that the market is selling off based off of this opening bell. But I'm glad that we did return up here. So the same thing with S&P. We're back into Sunday's gap. That's the buy zone for me. That's what I'm gonna execute. And last but not least, Bitcoin. I wanted to discuss that because now that we're seeing bulls start to show up in indices, I expect the same thing with cryptocurrency. So again, if you've been following our channel, you know we discussed that our first point of impact for Bitcoin would have been 65K. Price came as low as 60K. That's this wick. And as you can see, it's been testing in the 60, 62, 64 range. So technically it's still going off of that 65K area that we were looking at, but obviously price is going to have to consolidate a little bit, struggle down here, and then well, accumulate is what they say, but we know it as consolidation and then actually rise back up. So what I'm saying is I think it's in the season for crypto now. Again, you would still have to analyze the charts on your own. This isn't financial advice, but for me, like I'm looking at reinvesting in cryptocurrency. And I mentioned this on my last call that I do think this will be the last time that traders really or investors really get within your lifespan. You know what I'm saying? If you're my age, anywhere, somebody in the age of like 29 and 40, like I believe like this is the last time where it'll matter to you within your lifespan to actually get a return on your investment by investing in cryptocurrency. Don't shoot for the moon by only doing Bitcoin. There's other crypto tokens out there. Do a little bit of research, learn what their usage or utility purpose is, and especially taking advantage of the ones that's low. Now, the ones that's low, if they don't have like a big usage for it, then more than likely what's going to happen is that it's going to be a slow process. But, again, when you talk about passing on investments to generations, it starts with you. So you may be the ancestor that starts it for your descendants and you don't reap the benefit. But again, somebody has to start it. People have been reaping the benefit, but I do think that if you try to reinvest, like if you try to call yourself investing in cryptocurrency and it's Bitcoin is back up to like 100K, I mean, I don't know, unless you have big capital coming in already, I don't expect to see like a big return that you're looking for in comparison to being as low as we are now. You know what I'm saying? This is probably like the second time the market has been this low since it broke out of this area. This is the second time the market has been low since it broke out of this initial 65K. And now that we're returned back here, I have no choice but to look at market structure and say that this is the test for this entire zone, and price is going to buy back up. Especially since, since we cleared out these patterns, we identified this as a bearish flag pattern, which the bearish flag pattern, it normally exhausts itself after it makes its move. So this was the move. It shouldn't be like a continuation. Yeah, we can stay down here for a while, but this was the move for the sell. And if you see it even back to 80K, you already know what time it is. But that's all I got for you today, traders. Yeah, I think we're in a bull season now, and I'm excited for that. So make sure you do proper risk management on your investment portfolios. If you are an investor as well as a day trader, make sure you stock up on that. Buy low, sell high, right? We just got to keep it simple at this point. But hope everybody has a successful trading week. As always, I'll get with everybody on our video tomorrow with live trading. If you're within my community, you already know what's up. YouTube, that means I will see you Thursday. But I'm Antoine Farrar as always, signing off. Peace. Have a successful trading week, traders. If you're in my group, you can stay on.